Alright, in this video I'm going to try to walk through several examples. Let's see how far I can get. I'm going to start with the DAX Futures because I want our European customers and our friends overseas to realize that they've got some great examples and great opportunities to trade some of those markets over there. And the DAX is one of the most profitable charts you can trade. We use a 233 tick chart. Start at 9 a.m. Eurex time. That's German time. So let's jump right into it. We're going to use trend mode. We'll look at CPX. All right, so let's get started. This is looking at yesterday's trade on Thursday, July 7th. And you can see right here it's at 8:57 and 59 seconds. So we're almost at 9 a.m. The trend is actually down. Remember, this is trend mode, so this moving average is moving lower. So you can't really get long. But just like the example I showed you on the Dowie Mini, we may get in sync with this trade if conditions change, and that's exactly what happens. If you click on this bar here, right at 9, you'll notice the moving average is at 9413.3. Well, that's up from the bar prior, which is 0.2. So it goes up from 0.2 to 0.3. Remember, once it closes, that's what matters. So on a closing basis, the moving average moved higher, and then this comes down. Now you can get long right at 9420.5, or you can chase it up a couple ticks or even a couple points. I think a couple points is okay, so you can get long at 9422.5, okay, if you're chasing. Otherwise, you just get long right at the entry. We talked about the chaser in the last video. It's optional. But this is the first trade of the day. That's the main point, okay? You get in sync with it because the trend moved up. Doesn't look like much of a trend, right? I mean, it looks like pretty choppy from yesterday's close into today's open. No range, no trend. Doesn't matter. These setups are smarter than we are. Okay, so just, of course they're not going to work 100% of the time, but the odds are on our side, and this trade plan continues to prove that. So look what happens. Kind of wiggles around some, but now it's starting to move higher. It's testing the upper range. You get another setup. Are we interested in that? Well, no, not really, because we're already in a trade. So you ignore it. And it goes higher. It hits the money management level right there. And so now we're going to move our stop from down here. We're not only going to lock in and get to break even, but we're going to start trailing the signal line as well. So our stop goes 2 ticks below the signal line. And some people like to go 2 points with the DAX because a tick is half a point. So that's a style decision. You can decide to trail it by 2 ticks or 2 points. Just be consistent. Do it the same way every time. All right, anyway, so it almost hits target 2. Not quite. It comes down. But remember, our stop is below the signal line, right in this area. And that holds. Look what happens. See, that signal line is a great balance point, a demarcation in the sand, the balance point between buyers and sellers. That's why it's such a powerful indicator for us. Holds us in the trade, pops up, hits target 2, and that's a huge gain, you guys. And it keeps going. Ultimately, almost gets to target 3, which is up here, not quite, and then stops out with the rest of its position. If you're trading, obviously you have to have a large account to trade multiple positions with the DAX. I know traders that are at their critical mass already with the DAX, living on the French Riviera, living it up, and what a great lifestyle to have. Definitely a market to aspire to. Let's just jump forward and look at today's session, non-farm payroll. We'll take a quick look at the spreadsheet. All right, so remember 9 o'clock, same time, consistency every single day. There's a long trade right there at 8:56, and you can see this. The moving average is moving higher, and it's still valid. The trade doesn't cancel because the cancel rules are very clear. Still valid, and then boom, pops right up. You enter the trade. It's a big trade. You have to manage this carefully, but the stop's down here. Obviously, you don't trade a market like this if you're undercapitalized. But just imagine this is a forex chart and you're putting on micro lots. You can do that. We have European traders over there using credit spreads and using forex brokers to trade DAX spreads and doing quite great, and they can go in with much smaller positions. It works just the same. All right, so check it out. It zooms right up to target 1. You're moving your stop up to lock in a tick. You're starting to trail the signal line. It hits not quite target 2. So in this case, maybe you're going to take profit off your second position, or even if it's your first position, if it comes back down, maybe you take profit at target 1 just to protect yourself because you don't want it to come all the way down. On the other hand, the signal line's done a good job of moving higher, and you might just want to stay with the trade. Again, this is the kind of thing that every trader is going to do differently, but the more you trade, the better you get at it, and the more you start to trust the strategy. It ultimately does push higher. It does hit the target perfectly, but then something really great happens. It keeps going. You might say, yeah, but it closed below the signal line. Didn't it stop out? Looks like it did, but it didn't, because you don't trail based on the intra bar. You trail based on the last bar that closed. So the trailer, the stop is down here, right? You take the reading off the signal line and you put your stop. It would be at, either basically 94.14, working around a key level, 94.14.5. So the stop is literally still here, and it doesn't come anywhere near to stopping out. And so you're able to stay in the trade. Are we interested in these other green trades? No. I mean, they're probably good setups. Most of them are. But we're not, because we're in this one. This is the trade we're in. Got long right there. Look at it hit target 3. That's a huge trade, you guys. Still trailing up. And believe it or not, it comes all the way up to here where it stops out. Or actually, it stops out, I think, here. We'd have to double check. But a great trade and one and done. I mean, that's the theme of the day, or the theme of basically everything we do, is to try to get our goals as quickly as possible. Minimal trading to raise our average net profit per trade and grow our equity. So I showed you the Dowie Mini earlier. This is the spreadsheet for the DAX. I've got well over a year's worth of data in here. This is yesterday's trade that I showed you. This is today's trade. Obviously 4 positions. We talked about it in the prior video. Even if you're only trading 1 position, you track a target 2 and that's it. That's fine. Just to give you an idea of the type of growth you can get off of this trade plan. Of course, again, 4 positions. Now, you could look at single positions. What's interesting about this amazing spreadsheet, we looked at these stability graphs earlier, is that you could also look at some other cool things, like, for example, setup types. Actually, let's see. We want to go with, setup types. I'm not looking at the type of trade, whether it's a green or white or purple. I'm using this to look at my exits. So you could see target 3. Target 3 was the strongest position. The trailer was not quite as strong as target 2. Target 2 and target 3 are almost the same. That's interesting, don't you think? Target 1 and the trailer are almost the same. I find that fascinating. And over here you could see your really nice average profit per trade. This is the important number right here. Target 1 makes 107 euros per trade, every single trade, when you average out all wins and losses. We'll look at target 2, look at target 3. Your average net profit, 134 euros, 136 or 137 euros. It's like every time you place a trade, you're ringing the register and printing money. Yeah, there's losers, yeah, there's winners. This is the average over hundreds of trades. So that's why I keep the spreadsheet the way I do. Certainly you can analyze it till you're blue in the face. There's so many more things you can look at. But the important thing is you have a win-loss column. You learn how to get through winners, losers, stay with your trade plan. You got some weekly totals here, again, based on 4 positions. But I think you're getting the idea that this is all for information What you really want to see is growth, strong average net profit, real high winning weeks versus look at the losing weeks, barely below the average. But the winning weeks are way above, right? Look at the average net profit per trade. You really see it in here. When you're armed with this kind of information, you can make the kind of trades and the kind of trade decisions that is going to put you in the best possible position for success, regardless of what market you're trading. Forex, future stocks, options, it works the same on all of them. And you could use this technique and the techniques that I teach as far as building your business to become successful. There's a step-by-step process. Think like a business person, and basically you put yourself in a better position than 90+% of the people out there just trying to trade who don't arm themselves with this kind of advantage. All right, for this next example, we're going to look at a pound US chart. This is a 377 tick chart. It could be a 5-minute chart. We start at 8:30, and this is 7:42. Line is up, so you can't go short, right? We're using trend mode. But when the line turns down, you could take the trade. But remember, we're waiting for 8:30. So this is 8:54, and it does come up, and it hits the entry. Now it looks like it's going to stop and reverse, but remember, you don't go long because the line is down. We're in trend mode, so you can get short here when it gets in sync and comes back up to here. Now the only problem with this idea is that while it appears it hasn't hit money management, it actually has. And the reason why is because I've pushed my targets down to 1.5x, 2x, and 2.5x. But I still activate my trailer at the 1x. And the 1x is 2/3 of the way down. Now I could put on a second calculator to mark where 1x is so that I always know. And it's pretty easy to do. In fact, I already prepared one, so let me show you what that looks like. You see how many calculators I have on this chart? They're not all active. I've got the CPX active. I could set a trail marker. I did it with the regular CPT, but you could easily do it with the CPX as well. And all you do is duplicate the chart, but put all your targets at 1x. Because 1x is where we want to activate our trailer. See the little pinprick right there, that little dot? That shows you where the 1x is. All of a sudden you see it does start trailing down, and that's right at 8:30, unemployment coming out. You don't trade into unemployment, and besides, it's already way down here. So this trade has already left the station, and while it looks like you could get in sync with it, you actually can't if you're using this trade plan, because it hit its money management level. Okay, and the rule is once it hits its money management level, which is when you're going to move the stop, whether it's trailing or locking in some protection, whatever, if you move your stop, you do not try to get in sync with the trade. You just wait for the next one. Okay? You could see the tracking and stuff. To make it look more like CPX, I turned the tracking off. And now it looks just like CPX with a second calculator only showing me a little pinprick at 1x. You put all three targets at 1x, and you'll be able to mark where you should start trailing. So anyway, the next trade then is not this long trade, it's this short trade. And that is at 9:33, and that's within our trade time for the daily session. And you can see how it comes down. It hits the money management level. The stop would have been here. Now it moves down and starts working around the signal line, and then it pushes down and it hits target 1. And target 1, it went from 3007 down to 2996. So target 1 is 11 pips. Maybe you only end up with 8 or 9 pips after spread, but you're starting to now, you only take 25% off there. You're starting to trail down, and it goes further and it hits target 2, and it hits target 3, and you're trailing lower. And so, you know, from 07 to 96, I'm sorry, that was 1x. it's 07 to 88. So it's was more than 11 pips, right? It's 19 pips. And then to 81, and then to 74. This is target 1. This is this is where your trailer activates at 96, which is right there. See, 96. So this ends up being a very profitable trade. This was yesterday. Today, non-farm payroll, that's a day you should just have a 3-day weekend. Don't even bother trading forex during the US session. But yesterday, look how beautiful this trade went. Still trailing, lower. Ultimately, it gets all the way down to here. Ends up stopping out right in this area. And so from 07, you're getting out all the way down at 294, call it 47 just for the sake of being able to say it's a 60 pip move. You can see that beautiful trade. Remember, take 25% off at target 1, 25 at target 2, 25 at target 3, 25 trailer, 1 and done. Counterpunch Express, trend mode, same techniques I've been showing you all along. All right, we'll look at one more. Let's look at the same date. This time we're going to look at an MT4 chart. We're going to look at the Counterpunch Trader, and we'll look at a 5-minute chart on the same date that we just looked at, that 377 tick chart with CPX. So I've got trade tracking on. You can see the stop moving across. Remember, we're waiting till 8:30. This is around 7:55. Very similar to what we saw on the 377 tick chart. Let me turn trade tracking off so we can get it to look just like the CPX. So I just open the calculator, and you can see there's a lot of tools in the full Counterpunch Trader. We can go to trade tracking, set it to false, and that's going to get it to look just like the Counterpunch Express. But I do have the CPT directional indicator, the 20 moving average, with the color changes. All right, so remember, we're trying to get to 8:30, and right here at this short, you can see, well, let's back up a little bit. At 8:30 is when this is 8:30 New York time, and that is when the unemployment report comes out. So we're not really interested in taking a trade. This is 8:20, and you can see it's a long trade, but the indicator is red. It means it's down. We cannot take long trades, and instead it goes the other way. You see? So the next trade that actually works for us, the red line is down. We could take a short. It's this one right here, and if you remember, that's kind of what the 377 tick chart trade was, and you could see that it's at 9:20, and your entry is right here at 1.3001. So you get short at 2,999, and you're going to 2,966, 2,953, 2,941. You know, about a 33, 46, and 58 pip target levels to each of those different targets. They're way down here, you see? And it comes down and it stabs down, and again, you could put a second calculator on and mark where the trailer should be, just like I showed you. And it comes all the way down, hitting all those targets, trailing all the way down till it finally stops out down in here. A really big trade. Whether it was the 5-minute chart, the 377 tick chart, there's just so much you can do with this strategy. It's just a matter of learning it, learning how to focus on the right trades, how to assess a chart quickly, all the things that we teach in training. Hopefully this helps you. It helps you start imagining some of the things you can do with this strategy. It's really important to know how to use the tools. That just takes time learning. You have the trade room. Write down your questions. Bring them into the trade room. Ask me live. Let me show you. And like this, you'll learn the strategy. Excellent strategy. You can make money with this on an ongoing basis. It'll never stop working for you. All right, well, hope you enjoyed this, and I'll see you on the next video. This is TJ with the Counterpunch Trader and the Counterpunch Express.